Welcome to X&Y Trading, where 27 years of real-world market experience are packed into each daily forecast, helping you sidestep costly mistakes and capitalize on real trading opportunities. If you find this video useful, go ahead and like it. And don't forget to subscribe to X&Y Trading and click the bell so you never miss tomorrow's forecast and the setups we uncover next. Also, just a quick reminder, always read our full disclaimer at the end of the video. Trading involves risk, and this content is for informational purposes only. So, let's take a look at the current market context for the euro against the US dollar. The euro is currently trading at 1.1288, testing session lows with clear signs of bearish control. Now looking at volume and money flow, volume is rising on red candles across the 15-minute and 1-hour time frames. That's pretty strong confirmation of active selling. The Chaikin money flow, or CMF, over 20 periods reads, on the 1-hour chart, minus 0.13, and on the 15-minute chart, minus 0.28. So, yeah, that's a clear signal. Capital is flowing out of the euro. The smart money is positioning short. Moving on to momentum and the RSI. On the 1-hour chart, RSI is at 23.97, which is honestly deeply oversold. On the 15-minute chart, RSI is 27.72, so short-term oversold, but there's no bullish divergence just yet. We're not calling a reversal here without confirmation. So, let's talk about volume profile and liquidity zones. Heavy resistance now sits between 1.1350 and 1.1380. What used to be strong prior buyer interest is now turned into supply. Price has fallen below all key value zones and there's thin liquidity beneath, which means drops could accelerate if no buyers step in. Now about the influence of the DXY, or US dollar index. If the DXY holds strength above 106, you can expect continued EUR USD downside. But if DXY shows weakness or any signs of a reversal, a short-term euro bounce is possible, though it's not yet confirmed. Alright, here's the trading plan for Thursday, May 1st, 2025. The bias is strongly bearish. The combination of negative money flow, rising bearish volume, and thin liquidity really confirms it. Alright, so let's talk about trade setup number 1, which is selling the breakdown. The entry here is pretty straightforward. We're looking for a confirmed break, and close below 1.1285. The first target is 1.1255. And the second target is 1.1220. For the stop loss, you'll want to set it above 1.1310, which is just above that nearby liquidity shelf. Now, moving on to trade setup number 2, the intraday rejection short. If price retraces up into the 1.1310 to 1.1325 zone, but the CMF stays negative and volume remains weak, here's what you want to watch for. Look for a rejection wick or a bearish engulfing candle to re-enter short. The stop goes above 1.1340, and you'll be aiming for the same downside targets as in trade 1. And just to cover all bases, here's an optional counter trade, but only if the DXY starts to weaken. If we see DXY weakness, RSI divergence on the 15-minute or 1-hour chart, and a bullish volume spike on EUR USD, then you can consider buying at 1.1285. The stop should be set at 1.1270. For targets, you're looking at 1.1310 for the first, and 1.1340 for the second. Just a heads up, only execute this trade if all those reversal signals line up. So let's talk about some key levels to watch. First up, 1.1285 is your breakdown trigger, then 1.1310 acts as immediate liquidity resistance. The area between 1.1350 and 1.1380 is a major supply zone from past buyers, and if things get moving to the downside, 1.1220 is the next target on a momentum flush. Alright, just a couple of risk warnings here. If price drops below 1.1285, liquidity really thins out, so you can expect quick moves and some wild spikes. Also, if the DXY surges, that can totally fuel a deeper sell-off. But the RSI is already looking oversold, so if the bulls jump in and DXY stalls, a short squeeze definitely can't be ruled out. Here's my final word. Use this plan to guide your session. Remember, discipline beats emotion. and execution always beats prediction. If you found this video useful, go ahead and like it. Don't forget to subscribe to X&Y Trading and click the bell so you never miss tomorrow's forecast and the opportunities we'll uncover next. And yeah, always read our full disclaimer at the end of the video. Just a reminder, trading involves risk. X&Y Trading, trade smart, stay ahead.